Sunil of Ghaziabad invests in the stock market. IT is his favorite sector. With lower expenses and market across the world, this sector has given great returns over the last few years. He especially likes top IT stocks like Infosys and TCS. Safe money and good return. But this time it was not to be. What happened was on 13th April 2022, Infosys announced its results. Sunil was relaxed. He was not expecting results to be poor. But results were in fact poor and Sunil got worried. That's not it. Share performance on 18th April really shocked him. On BSE, the shares of Infosys fell more than 7% and were trading around 1623.1 rupees. At one point, they touched the level of 1592.05 rupees. Sunil was unable to digest why shares of a company like Infosys are behaving like this. Now, he got scared regarding the future return in these stocks. So what's the story of Infosys? How were its results? And the most important thing is, what should investors like Sunil do? Let's begin by looking at the results of Infosys. Results of the fourth quarter were worse than expected. In the last quarter of FY 2021-22, revenues of Infosys increased by a mere 0.7% on a quarterly basis. It was $4.28 billion. So as per that, in the March quarter, the company earned a profit of 5,686 crore rupees, which was less than expected. Besides this, Infosys seemed to be lagging behind TCS. As compared to TCS and compared to last 3 quarters, there seems to be a break on outperformance.
So now let us talk about the problems emerging due to poor Infosys results. In the fourth quarter, BFSI and revenue retail growth was 0.4 to 0.7%. Earnings in the US increased by 0.1%. Growth in life sciences was minus 10.6% quarter on quarter. On a quarterly basis, the company's margin declined by 2% to reach 21.5%, market which was expecting a 0.3% decline. Another issue is the poor operating margin guidance. For FY23, margin guidance is 21 to 23%, while expected figures were 22 to 24%.
As employees return to the office after almost 2 years, the expenses may increase. Wage hike in the first quarter and more than expected increase in on-site pay may put pressure on margins. Employees leaving the company is also one of the concerns. The attrition rate in the fourth quarter increased from 25.5% in the third quarter to 27.7%. On a yearly basis, the attrition rate of Infosys increased from 10.9% to 27.7%. Now let's have a look at deals. On a yearly basis in FY22, the total deal size decreased 33% from $14.1 billion to $9.5 billion. Similarly, in the fourth quarter, the size of the big deal declined from $2.5 billion to $2.3 billion. Experts believe that in the short term, all the headwinds will stay. Now let us look at the positive news related to Infosys. In the long term, strong signs of growth appear. Besides this, dollar revenue growth guidance is better than expected. For FY23, the dollar growth guidance given by the company is 13 to 15%, which is better than 12 to 14% given at the beginning of FY22. In the fourth quarter, the company registered 2.6% in digital, 6.8% in manufacturing, 3.7% in the communications segment, 3.8% growth in Europe, and 8.8% in India. More than $10 billion were earned from the digital segment. There was a growth of 41% in FY22. In the first 6 months of the last financial year, new deals worth $1.6 billion were made, but in the next 6 months, the company got net new deals worth $2.2 billion. Even the deal size reached close to the pre-pandemic level. Top 10 customers had a big contribution in dollar revenue growth. Even demand growth is expected to remain good. If we talk about new hires, then in the fourth quarter, Infosys has hired a net 22,000 employees, which is a record till now. In FY23, the company is looking to hire 50,000 freshers. Now the question is, what should investors like Sunil do? So, even though brokerages have reduced the target price for Infosys, they are still bullish on the stock. Money9 suggests. In the short term, there might be some headwinds in Infosys, but over a long time period, the company is expected to grow. So with a fall in its share price, after discussing with your financial advisor, you can invest in it from a long-term perspective.